Good morning, ladies and gentlemen. It was a very insightful session by my friend Mr. Gopal Mahadevan, and it was a very abstract session about the finance function and how one CFO has to go into the business aspects of his own company. Now let me ask all the speakers to introduce themselves so that then I will start the session.
Good morning, everybody. I'm Sushant from Matrimony.com Limited. I'm Vice President Finance in Matrimony.com, and I am there in that company from almost 11 years. And I joined Matrimony.com in 2013 for IPO process, and from 2013 I started IPO process, and company got listed in 2017, and I'm there in company, and we are very good, we are able to perform everything. I'm very satisfied there. And prior to that also, I worked in other companies like Accenture, and as audit or consultant, I worked in Hindustan Lever. I worked in USA International, also Amul company, as audit staff, as consultant. And I have done merger, acquisition, demerger, all that projects I have taken in our different companies. Thank you.
Good morning, everyone. I'm Bhaskar Lakshmanan. I used to work for TVS Automobile Solutions as my last company before I retired in March 1st. I worked for about 37 years in multiple organizations, multiple industries, and various positions, including few positions outside finance. Like I was operation head, I was a quality head for some time, used Six Sigma, I'm certified master black belt. So it has been a very interesting experience. I retired in 1st of March. My wife is a well-known speaker in Tamil Nadu. Her name is Bharati Bhaskar, and I have two daughters. One is in India and one is in US studying. So thank you very much for this. Thanks, Varsha, for inviting me for this. Thank you.
Yeah, good morning. I'm Ajay Kumar, and I'm with Sundaram Clayton Limited as CFO. I'm with this organization the last 4 years, and overall almost 25 years experience with almost all the manufacturing company, right from PepsiCo to Cycle, Ethyl Cycle, then Hero Group, and the Spark Minda Group, and now I'm with Sundaram Clayton Limited as a part of TVS Group. And if you look at entire career, like was from the cost management, treasury management, and mostly improvement in turning around the manufacturing industry. Thank you.
Yeah, hi guys, I'm Manoj Banawat. I'm Chartered Accountant 2003 batch. Started my career with Big Bazaar, that time of startup, so-called startup in 2003. Worked with Future Group for around 11 years across all type of business, Central, Brand Factory, E-Zone, Hometown, Big Bazaar, Pantaloons. My last assignment with them was as head of finance for their electronics and furniture business, E-Zone and Hometown. And after that, I joined Reliance Retail as a CFO for their jewelry business, Reliance Jewels. And then after some time, I was leading the cash and carry business, Reliance Market, for around 3-4 years. After working for around 6-7 years in Reliance Retail, I joined Carrot Lane as a CFO. I'm working there from last 3 years. And I'm married, 2 kids, 2 sons, one 10 years, elder one 14 years. New to Chennai relatively. Large part of my work was in Mumbai. So yeah, thank you guys.
Yes, let me introduce myself. I'm Kadir Kamnathan, and I've spent my entire career in the energy sector with companies like GMR, Lanco, and Cavanta Energy, and right from renewable energy and right from traditional energy to thermal power, power trading, I've been fully involved, including carbon credit, etc. And I'm a speaker in various forums and in various committees of CII and FICCI. Okay, let us go to this very exciting topic of how CFOs drives cost optimization. I have just one question to the audience now. In this Chandrayaan episode where we are successful, what is the most creditable part, do you think, in this success? What is the one factor which makes us stand us apart from the world? How much was the cost? Sorry? $74 million, I think. No? It's close to 375 crores. Is a very small amount what we spent for the phenomenal success what we achieved in this, and being the first country to do a south landing on the moon. So that is a very, this needs to be, yes. Now let me give a brief background of the macro economy about India before we proceed to the exact topic. Currently we are at $3.75 trillion and we are currently ranked at 5th in the world. And by 2030, we are projected to reach at least $5 trillion, and where we will come to number 3 in the world. And as far as FDI is concerned, around $60 billion has come in the last year. And we are a country of startups. More than 1 lakh startups are there in this country, and huge funds has come into the country. So all these positives actually project us to be in a $10 trillion economy in the next 10 years or so, where we CFOs and the companies need to take advantages of the sea of opportunities. And one more thing, what is happening in India is much of the successful business is being emanating from the Tier 2 and Tier 3 cities. In fact, much of the successful startups I came to know are coming from the Tier 2 and Tier 3. It's not coming out of Bangalore or it's not coming out of Hyderabad. Okay, it's also coming, but some of the major things are also happening from Tier 2 and Tier 3 cities, which is an all-inclusive growth which is happening in India. So which is always taking India up to the next level. How many of you since ESG was a topic, ESG actually is an interesting topic. How many of you have heard about CDM? What is CDM? Okay, clean development mechanism. Okay, what is carbon credit? Not even one in this crowd has heard about carbon credit? Yes, tell me. Sorry? Which company? Oh, absolutely. Okay, Jake. Do you know the methodology? Like AM29 or AF29. What is the methodology for this? No.
No, sir. that way I don't know.
Okay. I just wanted to add one point about my company. My company is the first company in the world to be registered for CDM under AM29 methodology. AM29 methodology means what I have done is that instead of putting up a coal plant and spending 5 crores per megawatt, I have put up a gas-based plant at a much higher price and been generating credits for the last 15 years, and more than 200 crores of revenue have been realized. Who buys these carbon credits? Whom do we sell to? Who's the buyer for all these carbon credits? Sorry? No, are there companies in India which buys carbon credit? No, okay, let me make it short. Actually, European emission norms are such, like companies like EDF, etc., nuclear power, they have emission norms where they say in case you're not meeting those emission norms, you have to buy these carbon credits from the lesser developed countries like India. So we need to sell carbon credits to these countries. So I just wanted to bring out this point because it's part of ESG. Now let us go to the questions, and Mr. Sushant? Yes, and from Matrimony, since he's from the online industry, I would like to you to give a case study about what are the steps in your company where cost optimization has been attempted as such.
Yes, I'll give background. Actually, Matrimony, we have 10 branch offices in India and 100 plus retail stores, small offices. Retail store means minimum 3 to 4 employees will be there. And branch means around 300 plus employees will be there. We have, that means already 100 plus 110, 20 offices will be there in India. And we have also operations there in Dubai. We have operations in US and Bangladesh. And our employee, if you see employee count, we are listed company also. Anything I'm speaking also, I have to think from that point of view, whether I'll be able to share some information or not. I have to be little bit, I have to think before any price sensitive information means I'll not able to speak. And we have previously, if you'll see all our data or investment presentation, everything there in Matrimony portal, we have around 4,000 plus employees there. 3 years or down the line 3 years, 4,000 employees there. If you see now, latest our report, employee now maybe 3,200 to 300 employees there now. And our sales increase, good growth there compared to industry, whatever growth there. And all these you are able to achieve mainly by technology, using technology. How same sales will be able to achieve? By reducing our cost. And in our discussion these points, I'll tell how we reduce cost without using technology. Then in subsequent segments, I'll tell how we have used technology to reduce cost. See, first, during COVID scenario, we got idea of cost reduction, how to reduce cost, because a lot of companies, they work from home, all that started. And we have, since we have so many offices there, we are paying substantial amount as rent expenses. During COVID, we started negotiation with all landlords, and we are able to save huge cost in rent expenses. And what happened subsequently also, we continued that process, and whenever any negotiation happening or renewal happening, we have around 130 plus offices there means, you will see every month around 10 to 12 locations rent renewal, it will happen, average per month. So when we are renewing this agreement, we are trying our best to negotiate and reduce cost. And generally, you will see now a lot of companies, there work from home options there. Therefore, all company, their office space, they are reducing. And the cost also, on that ground, we are able to reduce cost, good cost reduction in rent. And whenever we are drafting rent agreement, all that things, we have to keep certain points also. See, for example, rent agreement, we have to register. As per statutory requirements, in case your office there, you have to register agreement. Maybe we have to try to convince our landlord, okay, registration cost, we will pay 50%, you can pay 50%. Some landlord, they will agree, some landlord, they will not agree. But we have to try our best whether we will be able to negotiate. Or without using technology, all these things, we are able to reduce expenses rent. Similarly, power consumption and other expenses, admin expenses, by educating our employees how to power, when people are going home, how switch off their monitor or laptop, and switch off light, and use some technology also, use sensor, auto switch off, switch on systems, and power consumption for diesel, all that things. All we have initiated, and we are able to save good cost in the admin cost. And in technology also, similarly, our main expenses, overhosting expenses in technology, and will be their SMS cost, and software license cost. And since employee cost reduced or whatever process improvement we have done, automatic software cost, each employee, they are using some software, desktop, laptop, all cost also. That's why we got all impact, big impact in cost reduction because of this process we have taken. And coming to other cost, like overhosting cost. Since we are a tech company, we have, you know, our business is matchmaking business. And all our customers, they are creating their profile, and they are keeping their photo, all that things they have to save in the profile. So a huge data storage requirement should be there. So by negotiating based on volume, how much storage we are using, we are negotiated with our hosting service providers in India and outside India, some company also, because we have every service, we have multiple service providers will be there, so that our service is not getting impacted at any point of time. We are able to negotiate there also, very good savings also we have done there. And similarly, if you see any area, all expenses, we have, each expenses we have analyzed line by line, and we have reduced substantial expenses. Also, another point we have started current year, we have previously finance department or purchase department, they are negotiating cost. See always purchase, when technology cost, technology department responsible, admin cost also, admin department responsible. We can't take always, it will be difficult to reduce cost without taking other department into confidence. What we have done, we have created one cross-functional team current year and during April 2023. And in that, we kept technology team, admin team, and that team weekly we have created one project charter, and we have target there, how much cost we will save during the whole year. And in that meeting, weekly meeting that is there, and we have sponsor there, leaders there for each, for example, take expenses, we have so many variety of expenses will be there. For each expenses, we have one leader there. We'll analyze everything, and every week they will present what scope there to reduce cost, and by all that process, and this is from our, mainly our senior management team, our MD, they will meet monthly one time. They will see what target we have taken and what target we are able to achieve without compromising quality, because our customer is very important. You have to ensure quality of service, all that top priority. Cost, after that only cost reduction will think, without impacting quality at all. And we are able to achieve good cost reduction. Thank you.
Thank you, Mr. Sushant. That's been a very comprehensive thing about how you've gone about the process of cost. Next, I would request Mr. Bhaskar Lakshmanan. Is a very senior person, finance professional, and he has been in the highly competitive auto service industry, end-to-end solutions. And in fact, the 2 days which I've been learning with him, I've just learned a lot about the auto industry, and he will be addressing us about the cost optimization.
So morning, everyone. I actually shared that I retired on 1st of March. So the last company was TVS Automobile Solution, which is an end-to-end customer service, especially the aftermarket sales and service. So there, how the margins work in automobile sector. The margins are pretty low across. You touch any product, the margins are pretty low unless and until you are a very retailer selling on a door-to-door basis. So here we used, see the people who are sitting around this room, nothing new to you. In fact, it is that I'm not going to tell you something which you will never come across. So that is impossible actually. We are only giving a perspective to what we have come across. So the first is that the integration of the non-finance parameters with the financial parameters. So that is the most crucial thing that we did. At profitability or the cost, because we were in the service industry, we were also in these selling parts, etc. So how many stores, how many bays, in each service station, how many bays are there, at what is the cost at that level, and what is the cost at per level, per vehicle basis. So many of the parameters what you are seeing in finance, in your trial balance and P&L, may not be helpful to you to control cost. So this is one experience which I have in TVS Automobile. But looking back, in many of the companies which I worked in telecom for about 14 years. So there, many years back, telecom industry which we used, Six Sigma techniques. I don't know how many companies that we currently use that, because there we use Six Sigma techniques. Basically, there are 4 steps actually. Convert an operating problem into a statistical problem. Then from statistical problem, you give a statistical solution. And from statistical solution, you give an operational solution. So there are 4 steps in that. So in telecom, we significantly went through the cost lines, because there, it's very evolving industry every day. Even those days, the tariff plans used to be so dynamic, because I have never seen any industry more than the telecom industry where the cost structures keep changing dramatically. Of course, now the retail business are such that, Amazons of the world, Flipkarts of the world have recreated what is the ideal cost, etc. What cost that you're seeing today may not be the cost by end of the day. So that is what we are going through currently in terms of digital transformation, what we have gone through. But the thinking process is extremely important in terms of capturing what is outside finance, which is all your non-financial parameter. Tools really help in bringing that into aspects. Many of you, the companies that you are working with, could be having operational reviews intensely covering all these things. So we used some of the, software like Hyperion. I'm not too sure whether I can quote this, but we used Hyperion significantly in finance. So I don't know how many of you, do you use Hyperion? Any one of you? Yeah, great. And because nobody can actually assess the value of Hyperion unless and until you really use that actually. And I saw Concur somewhere. I don't know how many of you use Concur. I've used Concur in my experience. Very, very important tool. So the sum and substance is the non-financial parameters and the intensity of your review, operational review at that level for the cost optimization. See, all these things, whenever there is a cost drive, the cost move from one function or one cost center to the other. We achieve the cost reduction, but what will happen at the end of the day is the company P&L may not improve. The people who are doing the projects, they will come and say that they have achieved the cost. But finally, when you see the company profitability, you will never see some of the parts won't add up to the P&L. So that is where your Six Sigma techniques will help. We use some of that, and we use some of the techniques or the software, which is like Hyperion, etc., for the cost control. So that is the overall synopsis. Yeah. I don't know whether I covered that.
Yes, you have gone into the technology aspect wherein we use technology to control cost as such. Something important like this has happened, as you said, in the telecom industry. When we started this industry, I think in 1995 or 96, the cost of a call was 16 rupees a minute, I think. 16 rupees a call or 16 rupees. Now it is almost free. What has brought this transformation? It is technology. The same thing is we are attempting to do it in solar power also, because all the modules what you use in solar power are imported, either from China or so. So in case we go into this semiconductor and we have indigenous manufacturing in India, but they say to have a semiconductor industry, two things are needed. One thing is uninterrupted power supply, not even for a minute. And second is very pure water. I think we lack this. Very pure water for 24 hours, 365 days is a challenge as far as India is concerned. That is why we are still unable to go into proper semiconductor manufacturing. If we are going into that and we try to bring down the cost of your modules, solar PV modules, then your solar power also will come down. Cost optimization will happen. Next, I go to Mr. Manoj, who has been in the carrot lane where it is in the news also, and it's part where it is actually something like you are in a sector where more than 80-85% of the costs are uncontrollable as such, because it is going into purchase like what I have in the power sector, 92% of my cost is my fuel cost, it is uncontrollable. So what are you can quote any example where you have taken steps to optimize?
Yeah, true, Mr. Kadir, that as compared to manufacturing, where you have opportunity to keep a lot of margins in a trading business, a lot of margin is in the manufacturing side, and it's very important. The cost control becomes more important there while it is important everywhere. So rather than telling what, I will, rather than do whatever is my experience and based on whatever we did around cost, I will get into the how or what methods I learned during my tenure with whatever work I have done in various retail companies, entire experience I have in retail only. One of the, and I worked in like various capacities, so I'm not talking to you as a CFO, but I also want to talk to you like when I was young and working, like some of you are young members here. So on all those capacity, I want to say that first, very most important thing for any finance guy, that while we have very good understanding of the financials, but a very good grip on the business modeling. So whatever business you are into it, you should have a very clear understanding of, okay, what is my business model it is. And not only the sales side of it, Mr. Bhaskar said that we should also be having very good understanding of operations parameters. So whatever business you are doing, you should be very clear that, okay, this is how we do the business. This is the sales, and this is how the margin is, this is how the cost structure is, this is how we are EBITDA. Not only numbers, but the ops side of it. Also, like in our retail, we call it as a unit economics. Like if I'm opening one store, I should be very clear about how much will be the sales per square feet, how much capex it will run, what will be the rent to revenue ratio, what is the profit. And once you have that understanding, you should not move beside the strategy. Like many companies, especially in retail, do the business that they adopt one strategy and then they try to do experiment with their own model, and many times they fail. So that is very important thing. The second method I would say in terms of cost, what I have learned is, And one of my ex-bosses taught me that whenever you are getting into any cost discussion, try to understand the supplier's cost sheet. So and we are into trading organizations, so you should be, the moment anybody you're sitting on the cost side, you should be knowing his cost sheet. That, okay, how much he has incurred to cost and how much margin he is making. And that's where you should be very sure that he is not making unreasonable margin. And obviously we do the competition benchmarking. So that part is very, very important. The moment any proposal come to you by your business team, okay, this is the cost, please approve it. And the moment you do that, you should try and find out ways to understand how much cost the supplier has incurred and how much margin he is making. And while we should allow our business partners or suppliers to earn money, but it should not also be unreasonable. So that is another thing. Another thing we do in any cost and efficiency is the dispersion analytics, and we are the analytical people, finance side, and ABC analysis or dispersion analysis, finding laggards. Like in retail, we see that, okay, simply do a product-wise analysis, which are the SKU which are making losses, which are the store which are making losses, which are the department we are making losses. And you always work on the bottom performer and just keep cutting that. Not like that, you will always have a laggards. Like how you raise the bar, you are having 10% laggards, how you can make 9.5 and 9 and this. So this simple technique, to my mind, work a lot. In whatever you want to do, simply do an ABC analysis and it will work almost in every single area. One of the way to look at cost is also about the operating leverage. So when company is young and small, many time cost is like very, very unreasonable. And when you compare to your competition, it looks like, oh, you are incurring so much in the people cost or the fixed cost or rental or interest depreciation. But you should also be very, very clear, okay, this is my 5-year vision and this is how my operating leverage come in. Because when I'm talking cost, most of the time we talk about fixed costs, and which at a low scale looks very, very high. But as a finance guy, we should be very, very clear that, okay, this is what we are incurring now. Today it is like 10%, but how I have to reach to 5% and it will change, the percentage will keep on changing. So that understanding should be very, very clear, because every year when you do the budgeting, it will be very important because sometimes for business need, people will ask investment. But obviously the fixed cost growth should always be, in whatever business I worked, I simply use that okay, fixed cost growth cannot be more than 50% of the sales growth. And that's how I get a very good way of operating leverage. So that is another technique we should be having. One of the things which we implemented and in a trading organization, you are buying from so many people. Just imagine big bazaar who are having thousands of SKU and thousands of suppliers for the same type of product, and we put a very good bidding system. So if we have very good online bidding system, it creates a lot of transparency in terms of supplier and anything like you would have heard about the many people doing some wrongdoings in terms of buying. Any organization face this, that can be very much avoided. One of the mistake which I also did, I would say, whenever I'm driving the cost is like, you cannot simply go to a business guy and say that, reduce this, cut cost, why you are doing this, why you are not doing it. Like if we change our role from cost cutting to cost optimize, while it is mean the same, but cost optimize is a serious, simply think that cost we are also including along with the growth. So you are also thinking about growth, what investment it needs. Sometimes you are also asking to increase the cost. If you are thinking an area, okay, this particular store you are having 3 only salesmen, but sales is shooting up, why don't you guys add 1 more person? And that's the type of image which we build up for the business. The chances that they listen to us is very, very high. So this is also one of the area we do. At the last, I would say that many times the cost, so as rightly put by Mr. Kadir, that we always focus on the sales, operating margin and growth and all those things, and cost normally always doesn't come as a top agenda, and normally finance people only drive. But based on my experience, wherever I have tried to do it, whenever we want to do it as a project, okay, COVID has come and suddenly entire organization is working on cost. Something bad has happened in industry and suddenly we start working on cost and not otherwise. Most of the successful organization continuously work on cost. It should not be a project, It should be a process, it should be in a DNA. And as a finance guy, how we put that, how we align our management team, how we align our other peers to do it very, very continuously, methodically, and invest that saving into the growth. I'm not saying that simply be like, okay, you got this money and okay, put into the bottom line. No problem. You save this money, you invest in the sales, no problem. But do this very, very importantly, and that's why you become successful. So, yeah, thank you.
Though there are constraints in your industry, you could monitor these costs based on these negotiations with the suppliers, and you could do it. Okay.
Yeah, one thing I just wanted to add, you talk about negotiation, like very, very important thing for a finance guy is to be a very good negotiator. And you should read enough books around it that what is the best negotiation skill, because most of the time either we are negotiating with somebody internally or externally, so that also is a very important skill.
Yes, yes. And now we go to Mr. Ajay Kumar, who has been an expert in the dye industry and is the CFO of Sundaram Clayton. And I would request your input, sir.
Yeah, just good morning again. So just I want to give a background of the industry, how it works. So we are part of die casting industry, and we used to procure bar or ingot, what we can say, and then we melt it at close to 750-degree temperature, and then we make casting as per the mold and product design of the customer. Thereafter, we have process of machining, powder coating, assembly kind of thing. This is how operation works. So it's way back in 2009, immediately 2008, we know there was a meltdown in 2008, and I was given a responsibility for turning around a die casting plant. And okay, fine, so very challenging, and last consecutive 3 years, they made a loss. So we went there, we made a team to turn around that organization. And still I recall once the first day when I went to the plant, it was, they were looking at me like an alien had come right from finance department. So I got transferred, CEO was under resignation, he was in notice period. So we made a team of 4 persons and started working on the turning around the organization. So 2-3 major things we did on that. First, we mapped each and every activity of the process. What kind of activity we have for each and every product. We mapped, and then we find out what is the cost driver of those activities. Then we made a product costing on the basis of activity-based costing. Once we get to know the product costing, and it was very difficult that time because again, each other customer base is sitting in the plant because they were not getting material. Again, so many suppliers follow for the payment kind of thing, because in case there is a crisis, you are making continuous losses. Again, you are into vicious cycle, you're a problem, right? So again, we had this product costing. Then we had compared with our RFQ also, at what PBT we have quoted to customer. So we compared with where we went wrong. So we had first-hand information in first 2 months. Like these are the products where I'm making losses. We have categorized into 3 categories mainly. Red category means in case I'm not making money on that product, means PBT of that product is negative or 0. Then it is yellow category where basically I'm making PBT of 0 to 10%. And green category where my PBT is more than 10%. So these are the category we have made. And then we also try to understand whether these products where we are making losses, whether it is aligned with our long-term plan or not. There are some strategic product, we got it as a part of a strategy, and loss-making product as a part of basket deal. We cannot do anything on that. Where we had some product where it is not strategically aligned with our LRP, we demand exorbitant price increase from customer. Because that time a situation where promoter also thinking whether we should get rid of this business or we should continue this business. We went to customer, where was practical, we got price increase from customers. And wherever it was not aligned with this, we demanded such a high price increase. So later on, this die is moved to some other suppliers. So we removed those businesses from that. So one action we took. Then we made a CFT for each and every segment. Come to raw material. What we did for raw material, 3 actions we took for raw material, major 3 actions. How to localize these parts. We had so many imported parts, sheet metal part from other countries. Localize the part, finding alternate source in India. Third, how to negotiate better, how to get volume discount from the supplier. And we had some value engineering also. Without compromising the quality of the product, without compromising the functionality of the product, we had some VAV to reduce the weight of the product. We had that also. So these 4 or 5 actions, normally in die casting industry, if you look at typical P&L for die casting industry, the raw material cost is 45% only. But contribution is 25%. It means 30% value addition they have in their P&L. When I say value addition, it is variable cost only. It consists of power, consumables, indirect materials, packing. Huge means whenever there is a huge potential, huge value addition, then you have good potential to save and turning around this organization. So raw material, we did some actions on this. It comes to manufacturing cost. Since indirect material was very, very huge for our company, so what we did, we put a warrant system. We call it warrant system. That time we didn't have SAP 15 years back. So we put a warrant system. Warrant system means, like in case I am having, let's say, 200 indirect materials. So we will follow 80-20 rules. Top 20 materials means 80% of consumption. Then that 20% we made a warrant. Depending on the schedule from the customer, we made these are the items required for this production. You cannot withdraw more than that. We have given the physical warrant to the production head. Whenever they will go to the stores, they will carry this like a bank passbook. This month your requirement 200 numbers. You have already withdrawn 160 number. You can get 40 number. So they will get alert each and every time whenever they visit the stores. In case they want more consumption, again they will come to finance. I want more consumption. Why? Then we'll ask question. Then they will come up with a solution on this other thing. I'm going to work on some plan. So okay, this month is fine. Next month I'm going to save something. Okay, give it the target date. What is the plan? Like that, we put control on spares and your indirect material. Also, we worked on this power cost. Typical all the die casting or any heavy manufacturing industry, power cost consists of 7 to 8% of sales. Power costs, that time we had 11% power cost because of our inefficiency also, rejection, multiple melting kind of thing. So what we did, we explored some open access system. We got wind and solar energy also. And there was a huge gap, close to 1.8 rupees per unit gap. So all of a sudden my power cost has brought down from 10% to 9% because of rejection reduction. And then further with this improvement open access system, it went up to 7% as per industry norms. For fixed cost, see, we wanted to have a complete tap on break-even point. How to maintain the break-even point or how to bring down the break-even point. For that, the first principle is to make your fixed cost into variable cost. So what we did, we categorized all the operations into 2 portions. Core operations, non-core operations. Core operation we cannot outsource. But as far as non-core operations concerned, where semi-skilled or low-skilled employee, we outsource this. Outsource within the plant and outside plant also. We made agreement for 3 years, all piece rate. There will not be price increase for 3 years. But suppose as if I am doing by my own person, then again every year increases there. So many things are there, right? Number 1, suppose I am having 4 shops. Even if one person sitting idle in one shop, they will not go to shop number 2. But in case it is piece rate and contract based, contractor will make sure that in case of as per the capacity utilization, they will move their manpower. So they are also going to make money. Then again, we have some right sizing in employee cost also. Employee cost that time was 17.5%. I'm talking about only fixed salary. That is the admin cost and fixed salary cost, not a blue collar job. We had right sizing also. Every HOD was given responsibility to reduce the fixed employee numbers. And then with that also we got saving in fixed cost. So in short, we worked overall P&L, right from sales to depreciation and interest also. we forced corporate to have a better plan for the working capital. Since we are not responsible, so we forced corporate to get this better deal with the bank to reduce interest costs also. So with that, in the span of 18 months, we turned down that organization. And it was from 13 crore loss. It was not a big plant, 250 crore plant, and 250 crore two plants, 13 crore loss, become 11 crore profit in 2 years. That big thing happened in this. And then learning, what in case of learning, I said, if I refer to Mr. Gopal's presentation, first thing he told, have a business understanding. In case we don't understand operations, it is not possible to take these kind of initiatives. 100% sure. You know, to empathize their problem also. Let us engage all the stakeholders who are there, like production, SCM. Let us understand their process and support them wherever it is possible. Once you understand entire supply chain and business operation, then only you should be able to add some value to the organization, and you can turn down this information. Thank you.
Thank you, Mr. Ajay. It was a comprehensive presentation into your whole die casting industry. How many of you know there is a power exchange like NSC in this country? Okay. Have you traded in that actually? Is a company traded in that? Yes, okay. Now let me go to Mr. Bhaskar. And when you are addressing this issue of cost optimization, in such a service industry, how did you address it by not compromising on your service parameters and quality? Let's make it a bit short because we're running out of time and we need some time for questions to the audience.
So I recall Gopal's presentation this morning when his EBITDA number, they had some 4% to 9% or 4%, 4.5% to 9% or whatever it is. So that's a target they set. Similarly, the cost of service was planned at least in 2 industries which I worked, which is one is the telecom, which is basically a service industry. And the other is automobile service. Both the service where we, in telecom we used significantly the statistical tools. Basically, I do not know how many of you would have used software like Minitab. Have anybody used Minitab? Not really? Oh, you used? Excellent. So it's a very interesting one where, as I told earlier, we form teams to assess the cost for one particular sector or let's say one particular unit or whatever it is. The unit may come and say the cost is reduced, but P&L will not improve. Unless and until we drive the statistical techniques to see the consistency in the cost. For example, in collection cost, those days, which we used parameters fed into their success rate, there is something which is called a clawback arrangement because, they say that the money is collected, especially when the collection happens, you are paying the collection agent based on the collection. And check collection is also included. What happens when the check gets bounced? So it is a net collection that you do. So the first thing is that you introduce the clawback. Similarly, your distributor margin or whatever it is, especially on the acquisitions, activation commission, every line item that you go through, if you really see the current cost versus what happens after that, the event, then you need to factor those things also into the service. The first lesson that almost all of us learn is that, the marginal costing versus absorption costing. So that's the first lesson that we study in our CA intermediate. So many people, they are misled by the variable cost, but we do a lot of absorption costing and ensure that the overall profitability is there. This is applicable even for the service industry in automobile one, where the fixed costs are completely absorbed. Unless and until we say the fixed is no longer fixed, I think somebody made a statement. So you have to form that mindset, saying that I don't take for anything granted. The budgeting part is extremely important because you take all your fixed costs for granted, you will never be able to do the cost optimization. And many organizations have different adoption to this rule. First of all, they say that you go with any proposal, they will say that no, it will not work. So they keep pushing you to get the cost optimization. This is one way of doing things. Others adopt basically by different projects to aim at the cost optimization consistently at that level. I'm keeping this one very short because of time frame.
Since we just have 1 or 2 minutes, last question to Mr. Ajay. Keep it brief about what challenges you faced when you went into this cost optimization.
See, whenever you go for this kind of plant or this kind of initiatives, one thing we'll definitely going to notice, employee morale will be very, very low. Because of continuous loss, entire sentiment of the organization is very weak. And whenever you adopt any change, there will be a resistance, 100% resistance from the existing employee. Since the new person came to the organization, the resistance 100% will be there. So then again we had some issue on that resistance. And system support also, that time we didn't have SAP in that company. So getting data is again challenging, getting data and analyzing it. All entire person, they are busy with so many operations, right? Getting customer line, getting money, supplier, material from the suppliers. So getting resources for analysis is very difficult. No production head, no SCM, no PPC person. They are not going to spare their person for this analysis. That's one of the challenge I had faced that time. And since it was a pure manufacturing company, it's a complex manufacturing. It's not assembly plant or trading plant, complex manufacturing. So we took some time to understand that industry. And sometimes what happened, like in case you go this kind of crisis, they are very negative. They will not go for investment. No, we are making loss. Why you are going for investment? But there are some cost reduction initiative where you need investment. So it was very hard time to get investment approval from the management. But good part that we had very good support from the top leadership team, and we had a well-defined strategy for that. We had very, very frequent and transparent communication with the team. It's very, very important. Very frequent, transparent communication. They should feel that I am part of their team only. And then, after communication, you need to engage all the stakeholders. In case you have understanding, basic funda, what I understood, in case you have operation knowledge, in case you are able to engage all the stakeholders, in case you have frequent communication with all the stakeholders, then it's possible we can do that. Thank you.
Yes. Now, just to summarize, before we go to open the floor for questions, as far as cost optimization is concerned, first we need to bring in technology like AI, etc., to bring down the cost. Second is your participation from the people, which is going to be very empathetic. And third thing is going to be how you plan it through your budgets or whatever it is, and through your other technological financial reporting. And the fourth would be a constraint of regulations. For example, power sector has a lot of regulations, and so that involves a lot of cost, and certain costs cannot be reduced. You cannot reduce for example, for financials, you cannot reduce your GST cost or income tax cost. Tax planning can be done, but you cannot avoid tax. And next would be innovation. How innovatively you can try to make your product wherein you reduce your cost. These 5 parameters can be the basis to reduce cost. With this, we open the floor for questions.
When we look into the technology, implementation of technology, one of the basic aspects that we normally will look into is what is the benefit that we are getting out of the technology. And it is, in many cases, it is not measurable in financial terms. We cannot say it is X minus Y and this is my benefit. And when we are going to basically SaaS, software as a services, when we are going to that means it's not going to be a fixed expense, and it is every month, every year, every license will cost me something for that. So how do we look into this arbitrage where whether I need to go for this technology or not, or whether my current processes can be improved without the use of new technology? How do we look into that particular aspect?
So, rather than asking, we are all finance guy here, I'm assuming most of us, and ERP is like the most sort out investment. And based on my experience, I've seen in some of the businesses that investment in an ERP at a very initial stage gives a lot of leverage to the organization. Many of the young organization doesn't have required controls, and once organization become bigger and try to explore the growth, and at that point in time, if somebody want to do it, it is very difficult to change the ERP. And many of you would have been part of the ERP transformation, and sometime, at least I have heard from some of my ERP vendors that 75% of the ERP transformation fails. And that's why I have seen in one of the organization when I was in Future Group that when it is very young organization, we simply rolled out SAP that time. And when organization become big, it really helps. So I would say that as a finance guy, how we sell the benefit of this and how we see that futuristic thing that and we are able to sell it to everyone in the organization, including the management, that this is how it is going to benefit is very important. And meantime, that thing is not so easily being seen by the sales people or the that is not so easy for them to. We are able to very clearly see that, okay, control, governance, audit, blah. But for them to see it is very difficult. And how do you really see that and tell that in their language? Okay, so you simply say that, okay, there is a supply chain system. If you do a good SAP, you will save half of the money in the people cost. Your inward or whatever process you are doing, you will be able to sell the product. Suppose you take 30 days, it will take 15 days. Like if you tell in that language, it becomes easier to sell, is what I would say.
One line I'll add. See, there is no doubt at all technology very useful. You should have right people for that to use technology. And see, in our company, everything decided by technology. What price to charge to customers, which customer or which member we have to speak today, everything decided by customer, everything decided by technology, and automatic driven, everything automatic driven. No one deciding to which customer preference you should speak so that he need your service on priority. All that decided by technology only. Everything 100% technology driven. And every day morning we have business review meeting will happen around 9:30 every day. And automatic system driven, all previous days sales, whatever analysis by state, by region, by city, by language, everything technology automatically developed and everything available from next day morning itself, previous day to review by senior management.
So thanks for that. The challenge that this group will also have is actually to identify whether the investment in technology is worthwhile to go for it or not. I think that is also one of your questions, right? So I had a tough time in one of the companies I work for to implement Hyperion. So when I went for the proposal, that time Hyperion was costing somewhere around 2 crores plus with several users. So the company which I work for had multiple countries, multi-currency, and multiple gaps followed. For example, in UK it was UK gap, in India it was I gap, and the reporting was so complex. And it was done, typically all of us, I mean, we cannot take Excel out of all of us, right? Because we cannot live without Excel. So that's the main thing. Many of the companies are still striving for that. But it took a very hard time for me to prepare a note on the ROI for the Hyperion. So I did a greater study in terms of what is the total cost reduction, total manpower cost reduction, what is the time saving in, extended time for audit, etc. With great difficulty, the management actually approved my proposal, and today I'm glad that the company is really utilizing that. So that could be challenges faced by many of you. Thanks.
Yeah, good afternoon. See, I'm from Accord Metropolitan, I'm Sudhakar. I just have an observation here. Actually, we are in the hospitality industry, and actually this cost optimization is actually like a tightrope walking. There's a thin line between cost optimization, quality control, and wow factor for the guests. Because since we are in the hospitality industry, we have to impress the guests also. And at the same time, cost optimization also is there. So what are your thoughts about this? Mr. Kadir?
Okay, being in your hospitality sector as such, your line of margin is also actually a bit thin, not, though it's not very thin now. After COVID, actually, it is dramatically, your margins have doubled or tripled.
Not exactly.
I can see the share of Indian hotels and East India hotels, how they have actually come forward after the COVID has come actually. But the challenge actually what you face would be on, as what I was addressing into one of the, without bringing down the quality, Mr. Bhaskar was actually addressing that question very beautifully. That without reducing the quality and without reducing the service, how you are able to manage. You can take this question.
So, you know, in every line item, I'm maybe slightly generic because you know, I work for a service industry, but not exactly the hospitality industry. So, but what I have seen in my experience is their technology part, which is really fast changing and improving. Every line that, for example, your energy costs, when you walk into the floor, the light switches on. So that's one example. Today you walk into the same hotel, you know, if you go and use the restroom, there is no, you know, the tissue paper or the, you know, that is not there actually. That is replaced with, you know, the hand dryer. So this industry, hospitality industry, has evolved so much in terms of technology, and line by line, the tool which I have suggested to you, which many of the companies follow in getting the non-financial parameters, etc., coupled with the technology is the only way to go about. Otherwise, it is very difficult to do a historical cost and then take a working. You need to be online real-time cost, like, you know, how your stock market goes. So that is the one thing that in one of the companies which I work, they use something called closely watched numbers, which is called as CWN report. That goes at, you know, 10 o'clock in the morning to the highest authority in the company. So the report comes from the system at 8 o'clock in the morning. It is circulated to the top management. So the top management reviews and the report goes to the highest authority by 10 a.m. every day. That contains more than some 200 line items. I mean, I cannot name the company, but that's how they follow. It could be applicable for the hospitality industry also. But that one is the service industry which I work for.
In fact, I was working before for GMR, and now in GMR airports, they have used so many innovations like this to reduce the cost. So they've gone behind innovations and where all these things have happened. And there are so many parameters to rate an airport, and they've gone into each of the parameters. They've gone and studied around 20, 30 airports around the world, taking the best out of the parameters out of each international airport and put them into Delhi airport and Hyderabad airport. And of course, India, the problem is it is always crowded. The population is always increasing. So we still don't feel the real service is being given as such. It is becoming, turning into a railway station again. That is a constraint. Any other question?
Thank you.
In the interest of time, we'll keep the questions for the break that we're going to have.
Sorry?
In interest of time, we'll take the other questions.
She had a question. She had a question.
Hi, so this is Tanushriya from Tech Mahindra. So first of all, thank you. I think it's been very insightful to get you know, all your perspectives. So my specific question is to Mr. Bhaskar. So I think you made a very interesting point about, you know, how certain projects specifically, you would see that you know, they are making better margins, but when you look at a P&L level, the overall impact would not be higher, and there'll be some gaps, which is where, you know, Six Sigma and other tools play an important role. So while we understand, you know, some of these theoretically, it would be great to understand some kind of specific examples. I mean, of course, keeping the confidentiality. I understand there's a lot of financial information confidentiality, but just to understand from your experiences, from some of the incidents, some examples, you know, what kind of challenges that you found through some of these tools, so we could probably understand the concept better. So thank you.
Yeah, thank you. Practically all of us go through this problem. The first is that everybody will start looking into the low hanging fruits. The first comes the cost of manpower. So everybody will say that this is the structure which I want, and these people are, no, these actually belong to the marketing part and not the sales part. Somebody will say, no, this is not actually sales, this is actually the customer service part. So the fixing of, the mapping of the, the employee cost, wherever I go, especially service industry, employee cost is the most significant cost line item. Now, in fact, one of the cost line items which is coming is the compliance cost. Because various compliances that we have, the compliance cost is going up significantly, anywhere between 3 to 5%. In some cases, they brought it down to 1% actually. So the challenge is interdepartmental conflict. So that is where the role of the moderator, the one person who comes above is the CEO. The message of the CEO is very important. If your finance, only the finance cannot handle this. The moment you come with a project, people will push the cost from their department to other department. The other department will not have any specific solution to this. They will simply say that they will also remove that and show it, saying that no, this is actually, we absorbed it from marketing, who came here actually. So unless the boundaries, what we say that the scope of the project, when you define the scope of the project, you need to define what is included, what is not included, and how the consolidated financial performance looks like. That will help you to drive the point that this project has delivered, but this is only to this extent. And also the consistency of the part. Because if you do it in one quarter, you know, I think Gopal also made a statement, they made 6% or 8% in one quarter, but after that what happens? So the consistency has to be there, and the definite line items, action points has to be taken. This will help to avoid the interdepartmental conflict, so that the cost is reflected somewhere in the balance sheet, in the P&L, and consolidated numbers won't reflect your savings actually. So this is my experience. I hope I addressed your question.
Okay, with this, I think, in the interest of time, Varsha will conclude, and we all thank CFO Next for inviting us for this insightful discussion. I also want to thank my fellow panel speakers who have been experts in this.